Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 1st of May 2019. My name is Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. And to be fair, another pretty quiet day on the global foreign exchanges. Not too much movement in the majors. There are a couple of standout points to flag up. First of all, weakness in the New Zealand dollar against the US counterpart, the US dollar. The Kiwi slumping by 0.33% overnight. Still up over the course of the last week against the US dollar, but as you can see, that's a big chunk of those gains being knocked off there. And we'll look at some of the reasons for that move a little bit later on in the video. Elsewhere, the pound sterling notching up modest gains overnight, 0.09% to the better, but interestingly it's up 1.1% against the US dollar across the course of the week, so perhaps counterintuitively the pound gaining by stealth, shall we say, against the US dollar. Elsewhere, the Canadian dollar and the Mexican peso slide modestly against their US counterpart, continuing their weekly trend of weakness against the US dollar. The dollar itself largely unchanged in the form of dollar index overnight, and of course the market's marking time ahead of key economic data and central bank meetings later today. Okay, what's on the calendar then? Events that may move the markets today. Well, it's a fairly condensed calendar, much of Europe marking the Labour Day holiday, or May Day holiday, call it what you will. The first data that we'll see this morning comes out at 08:30 GMT, and that will be market manufacturing data for April out of the UK. An expectation of a read of around 53. The previous reading, of course, was on the high side at 55.1. Be very interesting to see how UK manufacturing has performed over the last month. Then at the same time, we'll have a speech, the first of our central banker speeches today, from ECB member De Guindos. Last time out, Mr. De Guindos spoke about a lack of confidence in the European economy, and that QE could be reprised if required. So it'll be very interesting to see if he still takes that dovish tone again today. We pause then until 12:15, crossing over the Atlantic for ADP employment change data for April. A look at private sector job creation in the USA over the last month. Of course, this data takes on extra significance as we approach non-farm payrolls at the end of this week. At 13:30, we cross over the border to Canada for market manufacturing data for the month of April for that country, and then we're back 15 minutes later in the USA for the similar release from the US. At 1400, we get the slightly more influential ISM manufacturing PMI data out of the States, and that's also accompanied by a look at factory gate inflation as measured by the ISM prices paid data for the month of April. We pause again then until 1800 GMT, when we'll have the Fed monetary policy statement and interest rate decision for the month of May. We'll also have at 18:30 a press conference featuring Fed Chair Mr. Jay Powell, who I'm sure will be questioned quite thoroughly by the analysts and reporters present after those bumper GDP data from the US last Friday. At 2015, our final central banker speech in action for the day, and this from the Bank of Canada's Governor Poloz. And finally, if you're still in the market at 22:45, you can catch building permits data out of New Zealand for the month of March. Okay then, breaking news and comment that's caught my eye overnight. First of all, mixed Q1 employment data from New Zealand saw the Kiwi or New Zealand dollar weaken sharply versus its US rival. Unemployment dropped to new lows in Q1, but job creation slowed and labour costs rose once more. So, as I say, a very mixed bag there from the New Zealand employment data. Meanwhile, staying in Australasia, Australian April manufacturing PMIs rose to a 7-month high of 54.8 in April versus March's read of 51 even. The production and new orders subcomponents of the data also posted good gains as well, and that's a real sort of shot in the arm, I would say, for the Australian economy, and one that may well influence the thinking of the RBA when they meet a bit later on this month. Meanwhile, back in the US, Apple reported better than expected Q1 earnings after the close last night. As I say, earnings were better and revenues, but the company did not give any guidance on iPhone sales, and it's discontinued guidance going forward from now. Apple shares rose by as much as 10%, however, in after-hours trades. So a positive set of numbers there from one of the world's largest companies. Okay, food for thought then, and something to take away with you into the trading day and beyond, and why not think about this? As we've just heard, the FOMC will meet tonight and announce its decision on interest rates in the US for the month of May. I thought it'd be quite interesting to take a look at what the market is predicting, both for this evening's meeting and for future meetings of the Federal Reserve. And this graphic here from the CME FedWatch tool shows us the probabilities of a rate change based on the positioning in Fed funds futures contracts, a futures contract that tracks US base rates. So for this meeting, the May meeting, it is all done sequentially in meeting order. There's a 97.5% expectation that rates will stay at the current 225 to 250 basis points. No expectation whatsoever at all of any kind of rate rise, and a very modest expectation, or probability should I say, of a rate cut. If we look further down the road, out into the back end of the year for October, December and January of next year, we find a rising probability of a rate cut and a diminishing probability of rates staying the same. So for the moment, rates are likely to stay on hold, but the market does still see the Fed as likely to ease later in the year. Wonder if Mr. Powell will have any comments that will dissuade the market from that opinion. Okay, it's risk warning time. Please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative. And as I say, please do take the time to read this risk warning thoroughly. Thank you very much for your time today.